Hello, welcome to Si Wing Yi. And it appears as we are in December 2022, it appears that a lot of those popular websites are starting doing their 2023 housing forecast prediction. So without further ado, let me on their behalf, let me present one of them, which is Zillow's 2023 housing market prediction. This article just came out, I believe, December the 1st, a mere few days ago. So without further ado, let's get it started. Zillow's bold, well, they call it bold prediction. Let me see what kind of bold prediction they have in store for the American population. So hold on, let me drink my hot chocolate while I'm talking also. It's quite cold, even here in San Francisco Bay Area where I live, around 50 degrees. So anyway, I'm not used to this cold weather. So the first paragraph indicates that Zillow predicting that the Midwestern markets will heat up. Well, you know what? Finally, finally, some of these popular websites are beginning to open up their limited thinking. They need to have a broader, expansive research in other metros in the U.S. because you and I know that they've been talking about about this pandemic boom markets, mainly in the western region of the U.S. These trophy markets up and down, if you will. So it's nice for them to use some objectivity to look at. There are many other areas of the U.S. that are doing well. It's not all doom and gloom. So let's continue because there's so much data to share. Their number one paragraph, it says the Midwest to feature front and center 2023. And and of course, they're starting with a southeastern market, which is Florida, which has been dominating the annual appreciation leaderboard throughout the pandemic, not just 2022, with Tennessee and the Carolinas and Texas metro areas are also doing extremely well among the top 100 largest metros. So, okay, they're not talking about Midwest yet. This is just starting out the first paragraph. They're just talking about the South and Southeast, which is fine. Hopefully, the following paragraph, they will discuss more about the Midwest as the headline indicates. So prices in most Midwest metro areas have not run up to the extremes. Yes, that's very true. It's a very stable market. It's a what we call it for years is a rust belt market as opposed to the sun belt market. You know what I mean by Midwest, right? Midwest are the areas located in the mid America. We're talking like Illinois, Indiana, Tennessee, Ohio, Michigan, Missouri, Upper New York State. So yeah, these areas are pretty much the Midwest, and it's not a trophy market. It's very low cost housing market. There's nothing, there's no bells and whistles. Yeah, you could make an argument this kind of market is a boring market, nothing exciting. But I'm glad to see that Zillow is beginning to talk about the Midwest as catching up. The Midwest housing markets and the economy slowly catching up with the trophy markets that we've been gravitating towards to in the past few years during the pandemic. Okay, the second narrative about on this forecast is buying with friends and family will gain momentum. Yes, with the home affordability at 40-year low as a result of skyrocketing home prices and interest rate has gone up to 6 to 7%. It has caused a lot of buyers to not qualify. So some of them are smart. Around 18% of them this recently they have pulled their resources together. They are combining the resources of their spouses, their friends, or what have you, combine the resources to try to qualify to buy a house. So that's good. People are becoming more resilient. They are trying to make it happen. So good for them. And number three, affordability crisis will stabilize, if not improve. Another good sign, because a lot of people sitting on the sideline 9 months ago when the interest rate were less than 4%. A lot of people were able to afford the monthly payment, but now with the interest rate have skyrocketing to 6 to 7%, and the mortgage payment has increased on the average by like 60% more salary you need in order to qualify today, as opposed to early part of this year, 2022. So monthly mortgage costs have doubled since 2019, driven by pandemic era price hikes, and to a greater degree by rapid mortgage rate growth, and pushing buyers to the sideline, as I mentioned. And the average hourly wage have grown 23% over the past 5 years, but rent are up 37% during that time after a pandemic era surge. So Zillow expects the national home values to remain relatively flat next year. So that's good. At least they're not predicting a crash or a bubble, if you will. So that's good. That's better than a crashing market, which is not going to happen, by the way. So no more double-digit appreciation that we have experienced in the past couple of years. Anyway, meanwhile, builders are working to increase the supply of rental properties at record pace. Builders they are building build-to-rent portfolios, single-family homes, to rent it out, not necessarily to sell to primary home buyers. So that will only exasperate the low supply of homes. Number four, surge in first-time landlords in 2023. In case you guys do not know, I am a real estate investor. Mainly, I'm not a local realtor, although I'm a licensed real estate broker in the state of California. We help our California investors to buy out-of-state rental properties, to become landlords, if you will, to buy out-of-state cash flow properties in the best affordable and prudent market in the US for the past several decades. Myself and my team has been helping thousands of investors to buy in the best low-cost entry-level home markets for cash flow to become a landlord. So I'm very happy that a mainstream website such as Zillow is talking about surge in newbie landlords, potentially new investors are entering the market because of the lower mortgage rate in the past few years. They're converting their second home into rental properties. They're buying rental homes because there are so many renters out there. People cannot afford to rent to buy the houses. They continue to rent, and that's why we're seeing more and more surge of first-time investors, first-time landlords entering the investment rental market. Because if they buy in a good market, as I mentioned before, the rent they will collect will more than offset their monthly debt obligations, including their mortgage and taxes, insurance, and everything else, so they can achieve positive cash flow and good yield. And most of those good cash flow properties are located in the Midwest Sun Belt. Isn't that cool to somebody talk about this? Like I said, I'm very, very happy because everybody's been gravitating toward California or the Northeast expensive coastal markets, San Francisco, LA, or Boise, Idaho, or Las Vegas, Nevada, Phoenix, Arizona, and whatever, all this boom and bust market. These type of markets are too expensive to cash flow for mom and pop investors, landlords. So Midwest and the South and Southeast, including Florida and certain submarkets, is ideal for first-time landlords to plunge into these markets, because rentals are going up rents are going up because there are more renters than ever in history due to reasons I just stated. And the last but not least, the fifth a comment by Zillow. The fifth title is new construction strength will be in rentals. Hold on a second. What this means are the builders are not necessarily selling to first-time home buyers or what have you. They are pivoting. They are creating more of the new construction portfolio, single-family homes to enter the build-to-rent space, meaning they can build their new construction homes to rent it out for renters, and so therefore hurting especially the first-time home buyers into buying new homes because many resale homes, many homeowners that own their homes right now, they are continuing to experience low inventory levels as existing homeowners hold on to their home and their record low mortgage rates. So basically what's happening, the resale homes out there is at a standstill because the majority of homeowners right now are locked in at the record low interest rate. They're not going to sell their homes at 4% or less and move into a higher price home somewhere else and paying a mortgage of 6 to 7%. That is very little motivation or incentive for homeowners to do so, given today's environment. So the resale supply of inventory is very, very limited, and the new builders are not selling to regular traditional home buyers. They are building a build-to-rent model to rent it out for renters. It'll create a very low supply of inventory that already exists even these past few years. So it remains to be seen what's going to happen in the next few years. I'm very, very curious. So builders of multi-units, we're talking apartments, are much more bullish. They are building more apartments in various parts of the country. So they will that part of the rental market is happening. They can, but single-family home rentals are very, very limited, and it's going to create some problems down the road. So let me see what else I need to go over. 30-year mortgage interest rate has decreased almost 1 percentage point from last month, September. This is a year-to-date right now. 30-year fixed rate mortgage, according to Mortgage News Daily, is 6.37%. So that's a good sign that the mortgage rate has decreased a little bit by a whopping 1%. So we've seen a little bit of demand of home buyers in the past month as a result of this lower of the interest rate. And also the Redfin also I made this video a week ago that what Zillow prediction also stating that people are continuing to flocking into warm weather, sun belt, south and southeast areas, not just the Midwest. Florida happens to be the number one destination for people relocating for various reasons. As I go down here, sun belt, and also people from expensive areas are moving to cheaper areas. The migration will continue to happen with the remote work being so rapid. So buyers are leaving expensive West Coast and East Coast cities, and they moving into the South and Southeast and into the Midwest, as Zillow projected to as well. So keep that in mind, okay? And that's pretty much I have to say at this point. So we are seeing a big major migration shift. So now Zillow is making this bold prediction that all the trophy markets out there, it might take away once again that the trophy markets are getting some pushback and getting some price reductions, mainly in the western region of the U.S. and also the Northeast, New York City, Connecticut, Massachusetts. Very expensive market, and people migrating away from those areas and from California. So the path of growth, because the Midwest, the houses are so cheap. I think people making, I believe, Zillow bull prediction is also my prediction in that the Midwest market, the housing prices are still very, very low. People gonna move into this location, Tennessee and Alabama of the world, and a few other areas in the so-called Rust Belt. So again, prices are so cheap, people will continue to migrate because rents have skyrocketed in many areas, many of the U.S., and people are moving to lower cost areas, and the Midwest and the South and Southeast is the major recipient of the massive migration that I believe will continue to go on for years and years to come. So that's my takeaway from the Zillow's Bull 2023 prediction. My investors have been investing in Midwest for many years, very high cash flow. And my investors also have been investing in South and Southeast, Texas and Florida, in North Carolina, mainly for many years. So I understand all these kind of trends. We've been on it for a while. So anyway, as I conclude this video, if you see value in this video, please smash the like button and also subscribe to my YouTube channel. And finally, put your email into my website below so you can become a free member of our real estate investing organization. So you can receive a free real estate education and email on a weekly basis so we can give you more details about what Zillow has just a forecast has predicted, that the growth is slowly venturing into the South and Southeast, and especially the Midwest, because of affordability. And also landlords, if you want to become a first-time landlord, first-time real estate investor, our website, our resources can help you. So subscribe to our YouTube channel, and also become a free member of our real estate investing organization, and you can eventually become a great landlord that you want to be. All right, thank you so much. This is Siwin Yi. Thanks for watching, and I will see you on the next video very shortly. Have a nice day. Bye-bye.